Okay, welcome and thank you for joining us to our Houston home buying webinar. We're excited that you're here to join us learning about what's happening here in the Houston market, what steps you can take to move forward with a new home in today's fast-changing market, and maybe kind of understand a little bit about what's happening. And we have 5 different presenters lined up today that I'd like to introduce to you. But before we actually do that, I wanted to go over a few housekeeping items. We will be sending this presentation out along with some documented questions and answers after the presentation is completed so that you have that as a reference for you. It's a lot of great information and you want to have it at your fingertips. We have the Q&A feature enabled, which is on the top bar on the Teams app. So if you have a question that you'd like to post, feel free to do that. We'll be answering those questions towards the end of the presentation. And obviously, you know, the question might be answered during the presentation anyway, but we'll just go back through on that. And we'll also have an email address for where you can submit your questions even after the webinar is over, and then that will respond promptly. So let's talk about who's going to be presenting today. First off, I'm Bob Kolpinski. I am the Vice President of Field Operations for Taylor Morrison here in Houston. And I joined the organization in 2007 in the field as a community sales manager. And I sold in a variety of communities around the city in all different price points. And over time, eventually was invited to join the management ranks for the sales management of our divisions here. And currently, I oversee the sales, purchasing, construction, customer care, and back office operations of our Houston team. Next, I'd like to introduce you to Jason Foringer. Jason?
Hey, thanks, Bob. Hi, I'm Jason Foringer. I'm the Director of Sales here in Houston. I've worked for several national builders, and I truly have found my home here at Taylor Morrison. It's a different company to work for and with as a home buyer. So after this presentation, I hope you too find your home at Taylor Morrison. Over to you, Christy.
Thanks so much. Hi, everyone. My name is Christy Farrow. I'm with Taylor Morrison Home Funding. I have been with the company for 20 years and been in the business for just about 24. So I've spent most of my career here with Taylor Morrison, anything from processing to originating, working with our sales teams and loan consultants as a corporate trainer. But honestly, this is where I call home, and I truly have a passion specifically for helping home buyers. You'll hear a lot about Taylor Morrison Home Funding today, financing. We'll touch on some basic mortgage 101 for those of you that might be just looking on your first home. But thank you so much for having me attend, and I am going to hand it over to my friends Phil, Christy, and Deandra Avalos.
Hello, my name is Phil Christy. I am the branch manager for the Taylor Morrison Home Funding office here in Houston. And I actually started with the company in 2005 as an area sales man, as a community sales manager. So I actually sold the homes with the builder, and I moved then into the funding and worked my way through being a loan consultant and then branch manager. I've worked in the Carolinas as well as here, and very attuned to the process. And before I joined Taylor Morrison, I was a licensed realtor in the area. So seen all aspects of buying a home. So I'll turn this over to Miss Deandra Avalos.
Hi, everybody. I'm Deandra Avalos. I am the Aero Manager, and I've been in the mortgage industry for 22 years. And I was fortunate enough to find my home with Taylor Morrison 14 years ago. I've worn many hats. I've been a loan processor. I've assisted with sales and closings. I was the mortgage admin in Houston prior to moving to Arizona in 2008. As a child, I dreamed of becoming a teacher. So when this role was presented to me 11 years ago, I was super excited. It allows me to teach and educate buyers on the ins and outs of credit and help guide them to the new front door and achieve your dreams of home ownership. So it all just comes full circle. Back to you, Bob.
Perfect. Thanks, Deandra, and I really appreciate everyone's introduction there. So now that you know who's going to be sharing some information with you, let's talk about what we're going to talk about today, right, over the next hour or so. We're going to kind of explain who Taylor Morrison is, what makes us unique as a home builder. We'll discuss the market update for Houston, and that's extremely important. We're all kind of getting all this various information, and really, what's the truth at the end of the day? So we'll put some facts behind all the chatter that's out there. We'll talk about the benefits of owning a new home for those of you that are first-time buyers or those of you that are moving up, and maybe those of you that haven't been in the market for a while. We'll talk about what's trending in design, and we'll really take a deep dive into navigating today's mortgage process, something that can be very, very intimidating for first-time buyers, and certainly for those who have been out of the market for a while, since those kind of regulations have changed over the years. And then we'll show you some simple steps that you can choose to do next to kind of move yourself along that home buying journey to see if this is the right opportunity for you to take advantage of. The bottom line is, hopefully we'll answer many of your questions over the next hour, but we'll also open it up, as I mentioned, with that Q&A feature at the end and answer anything that we can that's particular to what's on your mind. But we'll also send out the presentation with documented Q&A for you to reference, because a lot of this information might be going over your heads, and we don't want you to worry about that. We just want you to have a reference tool at the end of the call. So who is Taylor Morrison? Well, we're a home builder that's been around for about 100 plus years. And believe it or not, we have grown to be the 5th largest home builder in the nation, serving over 20 markets coast to coast. And the fact is, we just love helping people move into the new home. That's their dream, right? And the fact that we're most proud of is that consumers have recognized us, Taylor Morrison, as America's most trusted home builder for 7 consecutive years. And that is just unprecedented in Life Stories research. So we're very, very proud of that. We work very hard to maintain it, and it's just a privilege to interact with folks on a regular basis along those lines. What's more is we serve every single buyer demographic that's out there, from first-time buyers to move-up buyers to active adults. So regardless of your life stage or where your knowledge is and information, familiarity with the new home process, we're here to help you through that. We've also been recognized by Fortune magazine as one of the world's most admired companies. We're also honored to be a member of Bloomberg's Gender Equality Index, and we are led by the only female CEO among major U.S. home builders, Sheryl Palmer. And she really helps to position the organization a bit differently than our competition, as I'm sure you can imagine. So let's talk a little bit about what's happening here in Houston. As you know, the old adage is all real estate is local. So what's Houston all about? Well, let's start with some basic economics 101, supply and demand, right? First off, whether you realize it or not, or regardless of what you're hearing in the media, Houston is a very healthy real estate market. In fact, we are the #2 market nationally for new home starts, with over 43,000 this year alone. And that's just shy of the heady days of the early 2000s, where we approached nearly 50,000 starts in 2005, 2006, right before the market turned. Much of that demand here in Houston is attributable to 2 things. Number one, it's affordability. Houston is more affordable than Dallas, but it's obviously much more affordable, if you're listening to the news, than Austin. But really what's more important is that it's much more affordable than most major metropolitans around the country. So that chart on the lower left portion of the slide just talks about some of the home value to income ratio that Houston has a huge advantage over some of the other large metros around the country. Number 2 is population growth. We have a net migration here in Houston of about 80,000 people this year alone. And population growth means household growth. And as household formations increase, that obviously puts a demand on housing, whether it's apartments, whether it's condos, whether it's single family, etc. All of those needs need to be fulfilled. But despite the high growth in the number of new home starts that we talked about, that 43,000, this is a very different market from the other high mark of new home starts in the early 2000s, where we saw the housing market flooded with foreclosures due to very loose lending standards just a few short years later. Today's homeowner is in a much different position. They have built up equity over the last number of years. They are much more financially stable, and there is less than 1% of the homes that will be going into foreclosure. That's a big, big impact on availability. So if you flip over from demand to supply, you see that we have record low number of available homes, despite all those new homes under construction. Well, what's the reason for that? I mean, it's supply and demand. As you have more supply with homes under construction, but you have more demand. Why isn't there a lot of homes on the market available? Well, the reasons for that are threefold. Number one is cycle time. What cycle time means is it's the amount of time it takes to build a home from the start of the permitting all the way through to the close of escrow at the closing table. It's taking longer than ever today to build a home due to continued supply chain issues, whether it's appliances, air conditioning parts, windows, lumber, sheathing, shingles, you name it. That is a moving target for us that we manage on a regular basis. But labor challenges, as you can imagine. The economy is still quite strong, and availability of trades and labor to build homes is stretched with all these homes starting around the city. The number two reason that we have low available homes in terms of availability is resales are in short supply. And that's because folks who are currently in their own homes are pretty much hunkered down. They've either refinanced recently and they have a great rate. They're afraid of moving forward because they don't know the power of what's available from a financing perspective. They hear the gloom and doom that's out there in the media, and they're just putting up with something that really doesn't work for them, and they're suffering through it because they don't have all the facts in front of them. But most importantly, and perhaps really the unknown variable, is that land development for new home construction is lagging behind demand. The chart on the right of this page shows the gap between equilibrium in lots under development and actual starts. So just to help you understand what this chart shows you, those two horizontal dotted red lines are the vacant development lot equilibrium zone, and that's from 20 to 24 months. Below that, you see the solid red line, which is trending downward. That shows you the vacant development lots by month in a particular quarter, and you see that arrow is pointing to a 10.5. The equilibrium is 20 to 24 months, and you see the number of starts in the blue bar, which is just shy of 11,600 for Q1 in 2022. So you can see how that gap between the top of the starts and the bottom of the vacant development line is showing why there's such a demand shortfall or availability shortfall in terms of land development. So the bottom line of that is that when demand outstrips supply, prices will continue to rise. But like you, we hope that all the price appreciation of the last 2 years moderates. And that we have greater stability for all of us. We don't enjoy it. We don't enjoy the unpredictability of it. And we know that consumers are really fed up with it because everything is costing more today, whether it's a gallon of milk, gallon of gas, or your hamburger for this week's 4th of July celebration. On a more local level, we don't see prices falling in Houston. Rather, because of all of the above, which is high demand, low supply, and even with reduced buyers competing for new homes, we see prices stabilizing over the next several months. So that begs a question. Now what do we do? So that moves us into the elephant in the room, the obvious elephant in the room, interest rates, right? We all know that they've been rising, and they've been rising, nearly doubling since the first of the year. And that's causing a lot of pause and panic for people out there. It impacts us each in a big, big way. And we'll discuss some of those hardcore numbers a little bit later in the afternoon. But even though rates are approaching 6% for a 30-year conventional fixed mortgage, historically speaking, that's still cheap money, believe it or not. When I was buying my first home in the early or the mid 80s, I was excited to get an interest rate under 10%, believe it or not. And I was glad because just a year or two prior to me purchasing, my wife and I purchasing our first home, interest rates for new homes or any home, frankly, mortgage rates were 17 and 18%, as you can see on the chart here. So that's kind of like, whoa, big sticker shock there. So it kind of puts today's market in perspective. Doesn't mean it's not higher than it used to, But the good news is that today we're going to talk about a way to turn back the clock on interest rates a bit to help you save money day in and day out that's more meaningful than a simple price drop of a few $1,000s off the list price of a home, which everyone's hoping for. So typically, those kind of incentives that we're going to talk about and these kind of incentives that we're really excited about have never been offered before. And it's a great way for you to take advantage of something that's not available in resale, but only available from new home builders. And quite frankly, we've done our research. We know what our competition's offering here in Houston, and we know that we have the best opportunity out there. So let's take a step back and let's look at some of the benefits of owning a new home. Each of us on the call today has already decided we want to improve something in our current living situation. That's the emotional side of the equation, if you will. It might be stability or sense of safety for your family, regardless of where you're living today. You want something more. You might want some privacy or freedom to lock and leave your home and not worry about who's walking up and down the halls if you're in an apartment. You know, home ownership brings a sense of pride and it builds a community. You're part of something bigger, and that's always a great opportunity to look forward to. But you also get to personalize your space to ensure that you can live your best life in a way that the home reflects who you are as an individual, couple, or family. But you also get peace of mind with a warranty that helps you live your best life now. So that's some of the emotional side. There's also a financial side, right? And that's where the rubber meets the road. Owning a home is actually much less expensive than many folks realize. First, there's appreciation to consider. That's incremental value that is created over the long haul. There's the stability of a monthly mortgage payment that doesn't change, assuming taxes don't change and valuations aren't going out of whack, which we see stability towards, as I mentioned. But rents can sometimes change from time to time, and they're more expensive today than ever before. There's obviously tax benefits to writing off mortgage interest on your taxes that you file. There's also the long-term investment and the pride that comes with it. And then there's the forced savings as you build equity into something tangible. So, you know, when you step back and look at it, there's the emotion, there's the financial, and it all comes together for, gosh, how do we fulfill the dream? So what does your new home look like? Think about it. Here's a few design trends that we see from buyers around the country. In general, wider plank floors are happening all over homes. Warmer colors with contrast and larger tiles are the key parts of what people are selecting today for their homes. One of our most popular canvas collections, which is a curated design experience, is called Concerto, that you see here on the screen. It's our classic neutral palette, which combines soft neutrals paired with white cabinets and warm flooring that form a design foundation for your finishing touches. And if you take something like Concerto, that Concerto palette, or any one of our curated design palettes, and pair it with some of the colors of the year from Sherwin-Williams, you have a feeling that is natural, organic, and calming. The color of the year here from Sherwin-Williams is Evergreen Fog, which is that light green or muted green, if you will, on the lower 4 quadrants of those colors on the screen. These colors are able to weave themselves seamlessly together into trends we see happening in our homes, which is warm veined cabinets or countertops, woven materials, rich wood tones, and I'm sure a lot of you would agree you have those types of elements in your home today. So whether you choose Concerto or any of other curated design palettes, you'll find inspiration that expresses your personality and is the foundation of a great design that works not only for you today, but for someone else in the future when you make a move to something different as your life changes. And on this slide, you just see a couple of other of those professionally designed collections from Taylor Morrison's Canvas program that make designing your home easy and stress-free. We all have a lot going on. There's no need to make this any more stressful than it already is. And the real neat thing about Canvas is that these types of palettes are things that we use for all of our quick move-in homes, which are inventory homes under construction, and we modify them based on price point of the community. So we're able to tailor the price point to the community without losing the sense of design. And finally, so whether it's chatting with our internet home consultants who can answer questions while you're searching the website, our community sales managers who are the experts that you can visit virtually or in person in our communities around the city, meeting with our professional design staff or our construction superintendents, we're here to help you. And that's a help that lasts throughout the process and long after the close of the home. But in today's market, I have to say, and perhaps most important in that chain of people that are going to help you through the process, it's our mortgage consultants and our Aero consultants with our in-house lender, Taylor Morrison Home Funding, that will really open your eyes to the possibility of home ownership despite what you may be hearing in the news today. So with that, I'd like to turn it over to Christy Farrow and the TMHF team. Christy, take it away.
Thanks, Bob. You know, listening to Bob talk about all of these exciting, beautiful color palettes and all the gorgeous pictures of our homes, you know, we understand that buying a new home is a really, really exciting time. But the majority of our customers need financing to go with it. You know, maybe 15% of our customers nationwide have the ability to pay cash, but finding the right financing option, honestly, it should be just as important as picking your floor plan, all of those beautiful design selections, understanding the quality of the construction of your new home, and then making sure that you get that love and care all the way around through your home buying journey. And getting financing is a must for most. And it can be really scary. It can feel daunting. And certainly with everything in the news today with rising interest rates, it could make you feel that you want to back off from looking to purchase right now if you're just now getting in the market. And I think later on in our presentation today, we'll talk about some great financing incentives and promotions that really can roll back time on some of those interest rates. But what we want to do here maybe for the next 15 minutes is just give some of you a basic mortgage 101 education. There's so much information out there. It's kind of hard to put it all together. But we're going to try to put it together as organized as we can and really appreciate what are the 4 C's of mortgage qualification. So we want to, you know, talk to you about collateral. What is collateral? Well, that's the home that you're buying. And when you're getting a loan, we have to make sure that the loan we're providing you is going to give the value against the loan you're borrowing, protecting both you and the lender at the same time. And then cash. We need cash for down payment. We need cash to put on deposit with Taylor Morrison. And then we need to ensure that we're letting our lender know that we have stability of income and employment, and also that we pay our bills on time. And that wraps us down to the credit, which Deandra's going to talk a lot about that with Aero. But I'm going to start briefly, and let's just touch on the collateral piece really quick. And that's really the appraised value of your home. So when you secure that financing, we are going to order a third-party appraisal report that gives that current real-time value of the property. We want to make sure that homes in the area are selling for the same price, like square footage, like bedroom count. And we want to use an unbiased third-party licensed appraiser to make sure that there is no influence either way, whether by us, the lender, or you, the home buyer. And there's all kinds of regulations to make sure that that happens. But like I said, we have to make sure that we're lending appropriately to the value. And then you as the home buyer want to be sure that you're protected, that you didn't overpay for the home. So that deep research is done, doing all of those comparables. It's a value for moment in time, of course, and when you're getting the loan, but that absolutely has to be completed, and it's a huge component. With new construction, we'll order appraisals usually 60 to 90 days before your construction is completed, whether your home's you've been under contract for 6 months or even 60 days. We order that as we near construction completion and make sure that before we close you truly have the value in your home. Now, down payment, obviously, and cash needed for closing is very important. And you're going to hear LTV is probably one of our biggest acronyms that you're going to get with financing. And that is just the loan to value, which is the ratio against that value or purchase price of your home. We're going to loan money on whichever is less. So obviously, you and us as your lender want to make sure that your home value, when that appraisal comes in, is equal or more than the price you're paying for the home. And this slide shows a quick example of a $300,000 purchase price. And if the value came in at $310,000, we're loaning you money on the lesser of the two, which is the $300,000. That's awesome. You're walking in when you close with that equity already built into your home. But then the flip side would happen if for some reason the value came in lower, then that changes the parameters of your loan structure. Click the slide for me. Thank you. And then as far as the down payment goes and what's required, and we'll talk a little bit more, Phil's going to touch on the different types of loan programs, but just really understanding that where the funds come from are extremely important, and how we source those are extremely important. So things like, you know, mattress money, cash advances on credit cards, borrowing funds, if it's for the down payment, are not acceptable. It does need to be from your own funds. But the things that do work well, withdraw from retirement is a really common avenue for down payment. And a lot of times there will be retirement plans that don't penalize you when you withdraw for a down payment on a primary residence. Gift from family member, you know, mom, dad, sister, a spouse, if they're not joining you on the loan, that's also acceptable. There are some state and county down payment assistance programs, and if those are available, those are going to be based on your local municipality. So we're not really touching on that at all today. But the other thing that's nice about buying new construction is you sometimes give yourself that breathing space to save money for the full down payment on the home. We're able to look at your budget and talk to you about, are you going to have the ability, based on your income and your current liabilities, to save up that money and be ready when the home is to close. And if you own a current home, the proceeds from that real estate are completely acceptable as well. Slide, please. Thank you. Earnest money. This is something that sometimes is confused with down payment. So I just wanted to kind of throw this in there to really explain, when you go to contract for a home, there's an earnest money deposit required. That amount varies by market or community, but for the purpose of today's call, we would always say to touch base with whatever community you're looking at and what those requirements are. But the earnest deposit is applied towards your down payment when your home closes. So you may have a situation where you're seeking 100% financing on a VA loan if you're a veteran. There's still going to be a deposit given to the seller to have the good faith that you will close on time. Taylor Morrison does offer what we call a financing contingency in their purchase agreement that will give you protection for those first 45 days. You know, if we talk to you beforehand and everything seems to line up based on our conversations, but then we do a loan application and discover that maybe now isn't the right time, your earnest money is protected in the beginning to make sure that you have the space you need to apply for loan application. Otherwise, it's held on deposit until you close and then applied towards the down payment and perhaps any closing costs that are paid at closing. And then lastly, we just want to touch on interested party contributions. We're going to talk about incentives today that Taylor Morrison, the seller, would provide to you. We at Taylor Morrison Home Funding also provide an incentive through a lender credit when you apply. And then if you're working with a real estate agent, they also might be providing you a contribution of their commissions. And all of those wonderful incentives have to be utilized towards true cost for the transaction, they cannot be used for down payment. So you still have to have that minimum investment in the down payment that's required by a particular loan program, but all of the closing costs, escrows for taxes and insurance, maybe you have upfront mortgage insurance you're looking at, you want to buy down your interest rate, maybe you want to pay up to 1 year of your homeowners association fees, those can be covered by a seller, a lender, and your real estate agent. Just understand that certain programs will have a limitation as to the percentage of what can be contributed. So there's a lot of space there, and especially when working with Taylor Morrison, that you're going to see incentives that will far outweigh what you may see on a resale home. Next slide, thank you. And then last, we're just going to touch on our third C, which is capacity. And this is just your ability to repay the mortgage, your job stability, and the likelihood of your income continuing. So it's important to note that a mortgage approval is always based on your gross income. A lot of times we'll have customers that tell us the amount of money they bring home, but it really isn't about that. It's what is your gross income. We have guidelines that we follow that ensure that when we're approving a loan, that space is left for to pay your federal taxes, to pay child care, and keep your lights on in your home. So there are guidelines set around it. So what I want to make sure is that people understand that maybe you're a recent graduate of college. You're like, I'm never going to be able to buy a home, but you've got this great job, you've saved some money, or maybe you're looking at different programs for a lower down payment. If we're able to show that your degree mirrors the line of work that you're going into and you're receiving a salary, we absolutely don't necessarily need a full 2-year job history. We do look at income from commissions or bonus or overtime in a second job. We do usually have to show, though, that there's a 2-year history of that. And then the last piece that's totally up to you to share is if you do receive any alimony, child support, you can share that with us, and that can be used for income as well. So those are kind of touching on a high level the first 3 pieces of our qualification. I'm going to turn it over to Dee because she is truly our credit expert of all experts. All she does is talk to customers and help them enhance their loans and work with them for credit qualification to get them into their home. So Dee, take it from me here on.
Thank you, Christy. Credit is typically the topic that we always get the most questions on. When looking at credit scores for a mortgage, we will pull a tri-merge report, which simply means a report from all 3 bureaus, Equifax, TransUnion, and Experian. Your credit score gives an overview of your credit risk to a lender, and it's a factor in the price you will pay for your mortgage via your rate and potential mortgage insurance premiums. Lower credit scores usually indicate late payments or derogatory events that may prevent qualification until you're able to raise your scores or enough time has passed to show improvement in managing your debts. So let's talk a bit more about credit and ways that you can enhance your score to obtain the best possible financing. Next slide, please. This visual provides you a look at the factors that make up your credit score. As you can see, 65% of your credit score is based on timely payments and overall credit utilization. That just simply means how much you owe against how much available credit you have. Next would be the age of your credit history, followed by new credit and the mix of credit types like student and car loans, revolving debt, and mortgages. Now we'll go on to the credit basics. The difference between a soft and hard pull, or a soft inquiry and a hard inquiry. There are a lot of myths about credit inquiries, but a soft credit pull doesn't impact your scores. These would include things such as pre-approved credit cards, checking your own score with Credit Karma, and employment verification. A hard inquiry would happen when you directly apply for a credit card yourself, any type of loan like a student loan, car loan, or a mortgage. These inquiries will remain on your credit for 2 years. They can cause small incremental decreases in your overall score, but it's typically less than 5 points on average. And in fact, only 14% of consumers lose more than 10 points because of an inquiry. And 89% of the time, inquiries aren't even one of the top 4 factors impacting your score. So when shopping for big loans such as mortgages and auto loans, you typically won't get an incremental ding if you're shopping around within a 14 to 45 day time frame of the initial inquiry. When you pre-apply or qualify for a loan with Taylor Morrison Home Funding, we'll do a soft credit pull, which provides us 2 of the 3 scores. And once you make the decision to purchase a home and move forward with your financing, then the tri-merge report would be pulled. Now, the first 4 boxes just kind of go over some credit basics. The first 2 slides go over the difference between a residential mortgage credit report and a consumer credit report, and how the scoring models differ, resulting in confusion and sometimes a lower consumer score. We always get the comments, my score is 720 on Credit Karma. Why are you showing me at a 660? All residential mortgage credit reports use FICO versions 2, 4, and 5, regardless of your lender. The median score is what's used as the baseline for qualifying, not the average. So as an example, if you had a 670, a 690, and a 700, the 690 credit score is used for qualifying as well as for your interest rate. We already discussed how credit utilization is a factor in the credit score, but it's also important to mention that closing accounts in good standing could hurt your score as it plays into your mixed credit. So even if you're tempted to get rid of debts to better position yourself, closing an account in good standing may not be a benefit. Most derogatory information will remain on your credit for 7 years, but as those accounts age, you'll see your scores improve with regular, timely payments. And then in the bottom 4 boxes, the collection accounts can be kind of tricky as there's a lot of myths on how to handle them. All paid medical collections will no longer report on credit after July the 1st, so this weekend, actually Friday, and most don't have to be paid to receive a mortgage approval. Paying collections will keep the collection from reporting moving forward, but it will not likely result in immediate improvement. Public record accounts will remain on your credit for 10 years, and any liens will need to be paid in full, or a payment agreement will have to be provided to the lender before approving financing. So in summary, in order to build good credit, borrow what's affordable, don't overuse your credit, and pay your accounts on time. I know it all seems like common sense and it's easy to manage, but it's actually a lot to understand, juggle, and can simply be overwhelming. And that is why Arrow is here to help. Next slide, please. Thank you. Taylor Morrison Home Funding has a department designated solely for qualification improvement and loan enhancement. Arrow, or Able Ready Own, where we offer a personalized strategy to help enhance your credit and provide you with the guidance and education to get you on the right path. Arrow is not only for those of you seeking credit score improvement to gain loan qualification, it's also for those with great credit who seek to enhance their scores, which may provide additional financial benefits with interest rates and decreased mortgage insurance premiums. Arrow is a complimentary service for those looking to purchase. Our Arrow consultants will work with you to tailor a path specific to your needs. Next slide, please. After you pre-qualify with Taylor Morrison Home Funding, the loan consultant will enroll you in our Arrow program, where we will run credit simulations based off of that tri-merge credit report and provide you with a personalized improvement path based on your needs and goals. Arrow isn't classic credit repair, meaning we won't speak directly with your creditors or negotiate debts on your behalf. What we do ask is that you actively participate in your enrollment to complete our Arrow program and become an Arrow graduate. Some examples of Arrow recommendations would be to open a new account, be added or removed as an authorized user, pay off accounts or reduce balances on existing accounts. Our Arrow consultants are familiar with your financial profiles, and we work hand in hand with loan consultants and Taylor Morrison to ensure we aren't making recommendations that would hinder your ability to purchase, such as using all of your down payment funds to pay off debt. We engage with you and insist in keeping you focused and on task with open communication by phone and email. Next slide, please. Arrow has helped over 3,000 families gain score enhancement and achieve their dream of home ownership. This slide just kind of gives you a visual of the number of families that Arrow has been able to provide guidance to over the last 12 months. On average, it's taking about 88 days for completion and an average score improvement of 42 points. Our highest improvement was 183 points, but it did take over a year to achieve it. Our hope is that you see the value of Taylor Morrison Home Funding in Arrow and that we get the opportunity to work with you next. And now I will go ahead and let Phil discuss which mortgages suit your needs.
Thank you, Dee. All right, good afternoon again, everyone. I'm going to start this, as I know we've now covered some basic loan qualification and some tips on getting the credit score enhanced. So I want to take a few minutes to sort of talk about some of the common loan products, including their features and some benefits. This slide that you currently have contains a lot of information, and we're going to send this presentation out to you after this call. First off, talking about what is a conventional loan. That's a non-government loan and is the most common mortgage product out there. There's the classic 20% down that you can do, but you can do as little as 5% in a standard, and in even circumstances where it's a first-time home buyer that will be occupying the property in the transaction, you can do as little as 3% down with a conventional loan. Those loans go up in this area to a maximum of $647,200. So those are the conventional loans. Now move on and let's talk about VA and FHA loans. Nope, back one slide, please. Sorry, I didn't mean to say move on to the next slide. A VA loan, an excellent loan product for active duty and veteran military service members. Reservists also can apply and receive VA loans. However, there's additional criteria for those members to qualify, and all of my team is trained on those and we work with them very well. A VA loan can be obtained with little to no down payment. They are flexible with higher debt to income ratios and lower credit score requirements compared to those of a conventional loan. So it's an excellent product, and technically here in this area, well, on a VA loan entirely, there is no maximum loan amount limit by VA. So a veteran could do 100% financing up to $1 million or more if they are qualified to do so. An FHA loan. This is insured by the Federal Housing Administration and actually can require as little as requires as little as 3.5% down. And a very common myth is that FHA is a first-time home buyers program, and it's not. It can be utilized for anyone, and there are restrictions on the loan amount maximums for it. And as I noted on the slide, that is $420,680 for this area. This also has some higher allowable income ratios and also some flexibility on credit score requirements as VA did. Nearly 20% of all of the mortgages that we actually provide are VA and FHA loans. So that is a large percentage of what we do. Next slide, please. So I know that you heard me talking about debt to income ratio in this previous slide. And one of the things that comprises that is your actual housing payment. So that's your PITIA, which stands for your principal and interest. That's obviously what you're paying on the loan balance. The property taxes, which here in Texas, because we don't have state income tax, property taxes are a little higher here than some other areas, but they do vary by community and municipalities. So you'll actually see those vary. We do take into consideration the homestead break that you get for taxes when qualifying if it is a home that you are primarily occupying. We also calculate in your homeowner's insurance. This protects your home, also known as hazard insurance. We typically don't have many home areas that we have require flood insurance. So basically that would be a choice thing that you could add to it. Other things that included are mortgage insurance. If applicable, if you're putting less than 20% down on a conventional loan, this may play into the equation. Also, homeowners insurance, homeowners association. Though you don't pay that with the payment monthly, it's still a cost attributed to the home. This does vary by community and is paid directly to the association one time a year. Next slide, please. So how much can you afford? So like I said, I went into the debt to income ratio and what that actually is comprised. This calculation compares how much you owe monthly against how much you earn. When looking at the pre-tax income, the lender wants to make certain you're paying your new mortgage and all the current credit obligations you have. And that you have money left over for other expenses in life. This includes your federal and state income taxes, basic, food, clothing, child care, utilities. A really good rule of thumb here is to have a combined housing and credit expense that is somewhere at or below 40% of your gross income, and that leaves plenty of money over for those other obligations. There are loan programs that do allow for higher debt to income ratios, even with FHA and VA allowing above 50%. So you have to have typically good compensating factors such as good credit history, extra cash left in the bank and things, but those are things that we do consider when we're approving at that level. If you want to calculate your own debt to income ratio, you just consider your new housing payment, which I just went over what that comprises of. That's your monthly principal and interest, your homeowners, real estate taxes, your mortgage insurance if that applies, and any HOA dues. You would then add in your monthly minimum payments from your credit report. And then you will just remember this factor, to take the little number and divide it by the big number. And that will give you your adjusted, and that's your debt to income ratio. So your pre-tax income divided into the expenses, and there you get your ratio. Again, this will be sent out to you after the presentation. Next slide, please. So I want to talk about Dorothy. Dorothy is our combination of technology and people. And I know y'all are probably at information overload right about now. So I'm just going to take a few minutes to touch on this. At Taylor Morrison, we understand purchasing a home is not something that happens often in someone's lifetime. It's both financially and emotionally a commitment. And likely for most people, for most of us, is the largest purchase we ever make in life. So it's important that we make ourselves available and help you guide through every step of this process. As I start to wrap this up and we open up for questions here in a little bit, I want to introduce Dorothy. She's actually a state-of-the-art secure mortgage technology that works alongside my team that gives you the best home and financing experience with technology and personal service. This is bank level industry standard encryption technology, so you can trust Dorothy anytime, anywhere, account access, and secure document transfer and real-time loan information. I think Christy even said it earlier in her presentation, the days of sending pay stubs and stuff via email, that's gone. You want your information secure. Next slide, please. So whether you're ready to pre-apply or you're considering Aero services or you simply want to talk to a mortgage professional, on our website, there's an actual talk to us button. And by going there, we'll provide the link to you too. But you'll be able to click on it and actually email directly to my entire team and provide your phone number. We will call you back if you're just looking for Arrow counseling, or you're ready to get started, and have a full credit simulation and things like that done, simply click on the pre-apply for financing and get details on what you qualify to do. Click on the Start Your Journey that's circled at the top of the web page there, and select your community that you're interested in, and then go through and answer all of the questions. And once you've submitted your request, an email notification comes to my local loan consultants, and we'll be in touch with you. If it comes in during the business day, we follow up during that day. If it comes in after hours, I have a dedicated team each day that is monitoring the pre-qualifications as they come across, and we will go in and follow up with you that same day. If you just have general questions, click on the Talk to Us, send the email, send your phone number, and we'll give you a call back. Next slide, please. So we're really getting close to the end here and wrapping this up. I'm going to hand it off to Jason. But your first step is the pre-qualification before signing your purchase agreement. Once that step's complete, we'll notify Taylor Morrison, and we, as part of that pre-qualification process, we're going to call you and we're going to talk to you and we're going to give you the results, and we'll ask any questions. Plus, you can ask us the questions that you may have about your financing at that point too, and we'll be glad to provide that information to you. Then we provide the update to the builder team, the community sales manager, that we've completed your pre-qualification and given hopefully the thumbs up at that time. If we're purchasing with cash or for going financing, all you need to do is contact your sales manager with proof of funds in lieu of a mortgage pre-qualification. And then you'll do your earnest money and move forward. Following that purchase agreement though, we get notified of the sale the day after typically it's been reported. And that is at the point where we will contact you and start the journey on gathering all the loan documents, letting you know what we need, and get the actual loan disclosures out to you with all the facts and figures. And this allows us to submit your loan to underwriting, determine any additional loan conditions that you need. Your credit and loan documents will expire after 120 days. So we'll likely, if you're on a to-be built, have to update that information as we get closer to the completion and make sure nothing significant has changed. If you do have changes, please make sure that you immediately contact the loan consultant and let them know what's going on in your life so that we can make sure that it keeps your process moving smoothly towards closing. That is all that I have today, and I'm going to hand the mic over to Jason Foringer, and he'll take it from here. Thank you.
Thank you, Philip. Great information, a lot of information. Well, welcome again. My name's Jason Foringer. I'm the Director of Sales here in Houston. Thank you for spending the afternoon with us and sticking with us through that. A lot of really important information on what it takes to get into a home, market updates and trends. So what I'm going to talk to you a little bit about today is navigating the home buying experience in today's market. I'm going to talk to you about some of the tools we have online, important tools for you, the benefits of buying a QMI home, which is quick move-in homes. And then I'll finish up with some of the great promotions that we have going today. You've experienced it, you're living through it right now, supply chain. We've heard it ad nauseum for the last 2 years. It's impacting you in your daily lives, and of course it's impacting us as builders and developers. And what it's leading to is limited lot availability. So limited lot availability comes, it's a product of the sales that have happened in the last 2 years, supply issues, restraints, and the developer's inability to replenish that lot supply fast enough. Bob did a great job laying out the math behind it, and that is impacting while you're finding it more difficult to find home sites. And that leads as well to limited home availability, especially those quick move-in homes that will be available over the summer. That's probably potentially very important to you right now to get into a home before school starts, and that would require a quick move-in home. But rest assured, we have 39 quick move-in homes under construction around the city that will be done by September 2nd. and that is an important date that we'll come back to here in a little bit. But how do I get my home buying journey started? When I'm out with my family at dinner or I'm around town, I'm wearing my shirt. Many times people come up to me and ask me about where to find a particular home or about a particular community or where to look. And I always lead them to our online website. You have a lot of resources out there today, whether it be har.com, realtor.com, Zillow, etc. They'll be searching for homes, but there's no better place to find more information about Taylor Morrison and the home buying journey than the website itself. On the website, there'll be links to the TMHF, learning about all aspects of the buying experience, everything about our floor plans or communities. You can take virtual tours on a website and just really narrow down your search for what you're looking. So as well on the website, you can join community interest lists. That's a great way to get information about it by contacting one of the internet home consultants that you can find on the internet, and they will provide you all the information you might have. So pre-application with our in-house lender, like Philip just said, that is such a critical starting point, because there you're going to find your buying power. And that buying power is critical to allow you to narrow down your search to what communities and what homes you would be looking for. Next slide, please. So I just took a quick screenshot of the Houston Taylor Morrison website. And this is what you're going to see when you click on taylormorrison.com. You go to Texas, you go to Houston, and those dots there with the numbers in it, the 6, 2, 13, etc., those are the outlets that we have in that area. So it's a great place to start to narrow your search on where you're looking for a particular home, whether it be in a school district, a particular city, near work, for your commute, etc. So this is a great starting point. And to the right, you're going to see which homes, what communities are available in those locations. The next slide, please. Once you find the area and the community that you're looking in, it will take you directly to that community page. And for example, I clicked on Rayburn Reserve here, Rayburn Reserve 50s, it says, starting in the mid 300s. Up there, you'll see what you can see. You're going to see an overview of the community, the number of quick move-in homes that are available in the community. You can search each floor plan in that community. They'll give you a map of the community itself, the layout of the lots. It's called a site map. All the features, photos, and tours. You can really get into the community and learn everything that might be important to you about it. Furthermore, on the same page, you're going to find how to contact us, the IHCs, Internet Home Consultants that will be able to answer your questions. We'll give you driving direction to the community, and the community sales managers, the local experts that are available on site to help you. And always on the website, there's a spot for you to put in your information and ask a question. Reach out, we're going to contact you immediately. Next slide, please. Another opportunity you have on the site, when we're talking about limited home supplies, quick move-in homes, and lot supply, we have the ability, we give you the ability to reserve a particular home if you find it. So once you're on the website and you find a quick move-in home that is interesting to you, you're able to reserve it right there on the website itself, and then go in and take a look at the home. Furthermore, we have lot reservations. And the lot reservation is going to show you a map of the full community with each home site that is available. You can click on it and it'll show you the available homes that you could build on that home site. So it really helps to narrow down what you're looking for and have you prepared when you go into the community itself to talk to the community sales managers. We are always surprised and shocked by how much information and knowledge our customers have about the community itself by the time they come in, and it's all found right here on the website. Next page, please. So what are the next steps? Set a virtual appointment or visit the community itself. And please, when you go to the communities, let us know if you're working with a real estate agent. It's very important that we do that. We want to protect your real estate agent and you, and give you the opportunity if you want representation by one. But have your real estate agent either pre-register you before you visit the community or accompany you during your first visit. That's very important. And then again, find that buying power with TMHF. The next step I would do is go online, click through the TMHF, talk to Dorothy, and find out, fill out the pre-application, application and find out what that buying power is. And as always, I always say, ask our opinion. We are trusted advisors. We know this industry. We know our communities. We know our competitors as well. And whether you're buying with us or not, we are open to any conversation, and having that open, candid conversation will give you our opinion on what we feel. So always feel free to stop in one of the communities and ask us our thoughts on things. Next slide, please. So real quick, what are the benefits of buying a quick move-in home? Quick move-in homes are those homes that are in process right now. They're going to be ready to close sooner than later. What you'll do is you're going to enjoy beautifully designed, curated homes by our team of design experts. Bob showed you those palettes that they're using to build the homes, and they always build them that are on trend. They also build them to appeal to the most people. So that also protects your investment in the future when you go to resell the home. And it gives you a shorter time for building from the ground up. So as you know, if you're building a home, it's going to take much longer than it would to have a home, purchasing a home that's under construction currently. And it reduces that stress. You get the benefit of moving to a quality home without the pressure of making endless decisions. If you've ever been to a design center, there's a lot of information, a lot of decisions to be made. And by buying a quick move-in home, those decisions have been made, and the best decisions have been made for that particular home. So, and you also receive the same warranty as a to-be-built home. So whether you're building it with us or building one that's under construction, you're going to receive a warranty. And if you're looking in the resale market as well, you're definitely going to receive a warranty that is better than a resale home. Next slide, please. So let's get to some of the promotions that we have going on for the summertime. We have fantastic promotions. And at this time, I'm going to give it back to Christy Farrow. She's going to discuss with you what we have going over the summertime, and then I'll be right back right afterwards.
Thank you so much. You guys, I'm so excited about this. Nothing makes me happier than to be able to partner with our builder to really help home buyers tailor something that's going to fit their needs and their desires. And that's exactly what Taylor Morrison has done. We know that interest rates, we've talked about it, they've doubled since the first of the year. They've really caused a lot of our potential new home buyers to kind of push themselves out of the market. You know what they're waiting for. Will rates go down? Will prices drop? But we really think we found some solutions that give you the best of both of those worlds. Number one, keeping cash out of pocket and keeping it in your pocket, and the cash needed for close down is really important, as well as making sure that we're able to provide a affordable payment for you. We are offering right now for our quick move-in homes to close before Labor Day a wonderful 4.99% interest rate. And we also have a 5.5% interest rate, and that is on a 30-year fixed conventional loan with as little as 5% down. But with that, we're able to provide 4% of the amount of the total purchase price towards that 4.99 rate, and or helping you cover some other financing, whether it be closing costs or creating and tailoring a loan to fit exactly what you need. And this next slide is just kind of show you, I don't want to overwhelm you, but I do just want to show you just kind of the menu of things we can do to give you the buying power. And if we look at our average purchase price nationwide at $600,000, and we look at somebody putting 10% down, being able to purchase with a low interest rate, whether you're getting one through the 30-year fixed, or you're looking at maybe an FHA or VA loan, and you want to use the 4%, to buy down a rate with one of those other programs, it's giving consumers nearly $100,000 in buying power and saving on average about $550 a month. But when you speak with your Taylor Morrison loan consultant and you know an estimate of the home price you're looking at, we can work with you to find out what's most important to you. Are you trying to ease into a payment? You know, we talked earlier about a recent college graduate. Are you a renter and you're looking to just not take that big jump, but you know that your earnings are going to grow over the next couple of years? Maybe that's an opportunity to let Taylor Morrison subsidize a portion of your monthly payment through what we call a temporary rate buy down, giving you a couple years before your final fixed rate fixes up for the next 27 years of the life of the loan. Mortgage insurance, when you're doing less than 20% down, normally that's on your monthly payment on time until your home naturally reaches a certain principal balance reduction. But we're able to have Taylor Morrison pay that for you up front, never worrying about having to refinance in the future to remove it or working with a loan servicer to ask to have it removed. And again, reducing cash needed for closing, or if you have a fear that interest rates are going to be on the rise, we have 3 different long-term rate lock terms available for 6, 9, and 12 months. I do want to let you know that the 4% of price coupled with those interest rates are available on new home sales to close by Labor Day. Taylor Morrison has also extended that 4% out to their inventory that closes by the end of the year. So the interest rate of 4.99 is not available, but I feel pretty confident that with those dollars, we can get you pretty darn close if the rate is really in the payment what you're looking to reduce. And last, certainly not least, if you're looking to build a home from the ground up, or Taylor Morrison has an inventory home that won't be ready with construction to close until next year, they're still offering 3% of the total price. So I use this example of a $500,000 purchase price, giving you back $20,000 to use it however you want and work with our mortgage professional to really show you some comparisons of all the different things you can. And we really do feel that that is giving the best value. If you were to reduce the price by $20,000 and you feel like, you know, instead of paying $500,000, I'd rather pay $480,000, it is such pennies to your down payment and monthly payment difference. We'd rather see you get those savings right up front and you purchase versus waiting years to see, you know, equity do what it does. So hopefully you guys will take all of Jason's awesome tools and get online and see all of our available homes. Thanks, Jason.
Thank you, Christy. I really appreciate it. Yeah, at this point, you might be asking how do I take advantage of these opportunities? And one of the things that we find many times, as Bob had mentioned, the move-up buyer, the person who owns a home right now and is looking to move, whether it be for work or relocation or for a school district, you might need to sell that current home before purchasing our home and our quick move-in home. Well, we've partnered with OfferPad. I just want to touch on this briefly. And excuse me, and the tools for selling your current home with OfferPad are an incredible opportunity. So once you fall in love with that Taylor Morrison home, you could sell your home to OfferPad. What you do is you get a free offer within 24 hours. So when we send this deck out, you'll see a link to OfferPad, excuse me, in Taylor Morrison's portal. You can click straight through there to request that quote. And some of the great benefits you have is there's no showings. There's no cleaning of the house, no decluttering of the house. You're in the process of potentially moving. Summer is busy. Take advantage of the fact that there's no showing. OfferPad doesn't require it to be shown. There's no repairs to manage. There's no surprises. And what's really cool is you're able to align your closing dates of your existing home, the current home you live in, and the new home up to 9 months out and maintain flexibility, change the date as needed. We have customers so often try to time that closing perfectly, and it's such a difficult task to do. And with OfferPad, you're able to do that. You could close and move out of your house and into our home when the home is finished. And there's no need to rush or move twice. Stay up to 6 months after closing with our extended stay, OfferPad's extended stay program. What that allows you to do as well is sell your house this summer, purchase one that is under construction with us, close on it, and that helps you qualify for the home that's under construction. So in turn, you can take advantage of these great promotions that we have offered currently. And last but not least, I love that they offer a free local move paid by OfferPad. with some restrictions apply. But that is just a really cool value add to it. Next slide. So yeah, that sums it up in a nutshell. We went over a lot of information. I know it's kind of being fed by a fire hose, but we're always here to answer any questions you might have. I'm not sure if there's any questions in the Q&A box or not to be answered, but always feel free to reach out to us. Go ahead.
No, I don't see any yet. Jason?
All right, perfect. Thank you, Stormy. But again, this slide deck will be sent out to you. What we hope you do is you take this information, you get online, narrow your search down, find the community you're interested or in several communities you're interested in, reach out to either our internet home consultants and ask them any questions you might have and they will help you narrow it down even more, or get out there and visit some of the communities and talk to one of our community sales managers one-on-one. They are truly experts in the industry and for their particular community and for the particular homes they sell. So they're able to answer anything. But I just want to thank you very much for spending your afternoon with us and learning more about Taylor Morrison. I hope you see the value in Taylor Morrison and what we offer. It is truly a different company to work with. We truly are giving the tools necessary for you to manage your home buying in this market that we're working in. And compounding those rates and some of that cost or fear that you might have in moving. So again, thank you so much. Really appreciate you attending today. And please reach out if you have any questions.